The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 20th. Terrific 20,000 Countdown Tuesday edition of today's Trader's Edge Show. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon at 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on 20,000 Countdown Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 91 points at 19,973, 974, 26 points away. Not that that's a big deal, but it's going to be a big deal out here. The S&P trading up 7.5 points at 2270. NDX up 21 points at 49.55. NASDAQ Composite up 25 points. The semiconductor leading the charge up nearly 1%, up nearly 8 points, trading at 918. Everything is mean and green. Well, not exactly the case. Gold is back $8. Silver's down about a penny right now. So they're staging a bit of a comeback here, even in light of the strength inside of the Japanese yen. Leading the charge here to the upside for a second day in a row. Dollar-wise, it is Priceline.com up $11 and change, nearly 0.75%. BlackRock up 8.50. That's 2%. Fred's up 76%. Must be an IPO or buyout or just one heck of a day. You thought I was going to say hell of a, but I didn't. You've got Calavo Growers. That's up 8%, up 15%. Credit Acceptance Corp. That's on the rise. It is pulling the one-armed bandit up $7.77, up 3 7/10%. To the downside, Acuity Brands off $13, 5.5%. Intuitive Surgical off 1% or $7. FactSet Research, I think off 580, Praxair off about $5. So we've got Constellation Brands, the makers, not makers, but the distributors of Stella. I believe they are. That's to the downside, up $4, 2.5%. Okay, so where do we want to begin? And we've gotten a couple of emails. We'll take a look at wheat for Pradeep here, maybe in the second segment out there, and anything else that you'd like to. So all you have to do is give us a call. You can send me an email, steve@tfnn.com, inside the Tiger's Den. You guys, gals, know how to do it. Just go ahead and send a ping, an instant message out there. In the meantime, it is all the talk of the town. You can't turn on a channel anywhere and not hear folks talking about Dow 20,000. Bah humbug. It ain't 20,000 where it's headed to. It's much, much more than 20,000. Now, if we take a look at the Dow, you remember the doldrums out there, the doldrums where the Dow, in essence, traded between the range of about 15,360 or so up to about 18,260. You can do the math to figure out what that consolidation range is. It was pinged several times. The downside, the first ping back in February of 2014, the second ping in August of 2015. Then we got a double ping, Vasily, down around January 20th of 2016. And February 10th of 2016. To the upside, what set up the consolidation pattern around March of 2015. Then again in May of 2015, we broke out of that area in July 2016, came back, tested it, but broke out with conviction, a la the U.S. elections out here. Took it out big time. And now, when you have a consolidation, it's a beauty. Do you believe in consolidations? That's the question, especially for those of you that were reminiscing about the year 2000 in the Dow. Because we'll go take a look at it. Any chance, I just throw this out there as a piece of information, any chance that the Dow might have consolidated before it went on to make its highs out there? Just potentially. Do you think that might have happened out there? Something to think about. But if we take a look at the Dow right now, and we know that consolidation pattern has broken, and broken big time, the move, or what we like to say is a measured move, is equal to or greater than the consolidation. That's you can't argue with this consolidation. Well, you can argue all you want. It is what it is. You don't have to believe it. But it's here. Just like Santa's going to deliver the gifts, or Hanukkah Harry's going to deliver the gifts out here. So where does this measured move take us to? 21,223, give or take. We're not going to worry too much about a few dollares to the upside or the downside. But this move is not over. Doesn't mean there's not a retracement or something in sight. But, folks, it is not 20,000 that the Dow has its sights head on. Maybe it is for the day. But don't think like that's it. Adios. Sayonara, baby. Going to head south. Not going to head to the South Pole. This time of year, people are headed to the North Pole out here. Now, I mentioned this yesterday on Tom's show. I was able to get my Dow chart to go back a little bit further out here. Highest reading, if we take a look at the price oscillator, difference between two exponential moving averages. Did I say exponential? I believe I did. 366.61. The data I had yesterday when I did Tom's show only went back to, about 25 years. I can go back even further than that. Not a whole heck of a lot further. When there's a yellow line that disappears on the bottom panel of my chart, it means we're not anywhere near close to that level. And you're going to see us, even in 2000, nowhere near. Now, that's the difference between two moving averages. The price data here is not what is creating a problem. The market is strong, super strong like bull. Now, you already knew the answer to this question when I threw it out there, right? I mean, you already know how I kind of operate as we take a look at patterns. They repeat over and over and over again. And in the case of the Dow, yes, there was a consolidation. We'll say that consolidation began in 1997, sometime right around the middle of November 1997, when the Dow was trading out at about the 74.26 level. That was the bottom of the consolidation. By the way, that was, in essence, it began in November. That was your first, in essence, tag of that level. Then in January 1998, then again in August of 1998, and one more time, that famous October low, that seasonal low out there, right? October of 1998. That set up the bottom. Up at the top, you could say it was in May of 98, May of 2015, I think, was a top out here. Then again in July of 98. Then again in November, December 1998. And price just kept on cruising. Now, that measured move is equal to the yellow rectangular box out here. So for those of you that are trying to find the bear, the big grizzly bear out there, I'd say at least wait for the consolidation. If you believe there's something that emulates this calendar year versus the year 2000 out there, there's a consolidation pattern going on in both. The Dow, whether you like it or not, it's headed to 21,223. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. So Pradeep had asked by email, asked if I would. He's got a position in wheat, WEAT, being the ETF for wheat, and wondering what we see in the charts, considering possibly a tax loss in it. So he's in at 738. It's trading out at 684 right now. But I think that tax loss was. No, just in a regular brokerage account. We can even talk about tax loss. But first, let's take a look at WEAT. And Pradeep, if you're watching this on TigerTV, the top portion of my chart happens to be the March contract for Kansas City wheat futures out here. And we're really just trying to understand, because the market profiles are going to be different than that which I provide you for the actual ETF. And if you're going to say to me which ones are more important, well, it's going to be the futures contract, which is why I actually put it up on the screen here. But I'll give you the levels, for both. If we take a look at WEAT, let me sounds like WKRP in Cincinnati. But let me also do this with regard to the ETF. Let me add the volume to the bottom just so I get a feel for what's going on volume-wise out there. There we go, volume. Now we'll just kind of scrunch it a bit. That's a technical term for how do I get that out of the way, but still have enough data that makes sense to take a look at. So now we take a look at WEAT. Well, I'm going to here. I'll keep it up to the. I'll reduce the actual futures contract as we speak right now. Here's what we know. In the case of this ETF, it made its lowest low thus far, December 1st, 2016. Volume there, 315,000 shares. Now, today you're pulling back into it with much lighter volume. Now, when I say much lighter, I didn't mean much lighter. I meant only so far 10% of the volume on that trading session. So this would say to me that things are dissipating to the downside. If we take a look at the ETF structure, you're going to see that really where this traded to today is at the bottom of the market profile, that level being $6.76. If you see it close below the low of December 1st, volume or not, that's at a price point of 670. That was the wrong number. The right number is 6 671, then you might have a problem. But I say might because you really want to understand what's going on inside of the actual futures contract. Now, I don't know what makes up. I don't know which futures contract makes up this ETF. You'd want to check that out, Pradeep. We got some guidance here inside the Tigers Den to send me towards the Kansas City futures contract. So I'm going to go with that data as we speak right now. And with regard to it's been making an attempt to actually break out above its TAS market profile. It actually closed above it once during the past 5 trading sessions. It was back on December 14th out here. This is a pretty stiff level of resistance. I say that when I say stiff. What I mean, it's a significant level of resistance in its daily profile because that point of control, the so-called center of the box, that oftentimes is not in the center of the box, which is why we can say who really has control of this price area, is because it's closer to the top of the box. That means it's really sellers. So any close above 414.4, a bushel out there, would actually be bullish and would send price up to its weekly profile. I don't see any other bottoming patterns out here, but we do know that the pullback is on light volume. With regard to tax strategies out here, aside, I would pose this question. Anyone that can incur expenses and reduce their income this year, in other words, have fewer expenses next year as an example, it's to your benefit to do that based on what we know. In other words, do we think that the new administration is going to raise taxes? And the answer there is no. So it could only possibly, I think the answer is no. So it could only possibly improve next year or beyond that, right? We'd have no idea how long it would take for Congress to go ahead and pass any tax legislation. That's, that's worse than pulling teeth out there. But we know that taxes are not likely to rise. I don't know if this is a read my lips kind of a deal out here. But so, to the extent that you can utilize and incur expenses this year instead of next year, it makes sense to do that. But the normal tax selling that takes place in a marketplace towards the end of December, do you guys and gals think that that's going to occur this year? Now, wait a minute. Just step back for a moment. What we just said was you want to try to defer income, right? So if you've got gainers out here, do you really believe that people are going to sell their big winners this year? Does that even make any sense? No. Sell losers? Yes, but up to the point in time that you can offset your capital gains. You don't want to do it beyond that. I mean, you really don't want to do it beyond that, right? So the normal tax sell, and then there's a whole slew of people that say, yeah, you're right. That we probably won't see that big tax selling, so to speak, at the end of December. We'll see it in January. Now, hold on a minute here. Why? Why are you going to wait till January? It's long-term capital. Let me state that again. Did I say long? Long-term capital gains. Why would anybody sell right after January 1st? If they're long-term investors and they've got gains, why would you do that knowing that the seasonal cycle of markets basically takes you up into the July timeframe after a January bottom out there? Doesn't even make any sense to me. It probably doesn't make any sense to you as well. So don't necessarily pay attention to a lot of the stuff. We can logically figure this stuff out here. We do. So, Pradeep, I hope that this helps you out with regard to, considering what you ought to do with wheat. With regard to the tax aspect of it, if you've got losses that are going to offset some income so that you're, and you want to get back in on this trade out here, you can find ways to do that. Okay. So with regard to the market, another question came in and said, well, what's the price target for the S&P 500? If the Dow was going to head up to that level that you gave us, where's the S&P 500 headed to? And we've got a number of different ways that we can take a look at this, but most certainly you've got the consolidation, just the most simplistic technique out here is taking a look at the consolidation pattern that then suggests that the S&P 500 should head to 2419, give or take, right? So 2400. Of course, you and I, we've talked about this before. We believe that we are in stage 5, wave 5 of the Elliott wave out here, and that gives you a price target. That's this larger screen here. I'll go ahead and bump it up. That says that the S&P 500 set it for 2500. 2497, but we're going to go ahead and give it another 3 points in order to be able to get up to that level. When it gets up there, then we have to really start focusing on what other patterns might be in play at that time. But folks, there's no reason for any major tax selling. Sell the losers, you bet. But are people going to be selling their winners as we speak? Are taxes going to be more or less next year? At least the same, right? So there's not going to be any big selling in the big winners in the market. That's not going to, and the big winners, that what the losers are going to start toppling things to the downside. Really? Come on, not going to happen. Just not going to happen. The preponderance of evidence is out here. It is so in front of us, All we have, these are not my opinions. This is just simple, normal patterns that you and I trade all of the time, let alone the Dow blew its Tom DeMark sequential count earlier in the day as price moved up above the old high out there. Nothing more bullish than a failed bearish pattern. See.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 97, trading out 19,980. Right down 316 on your pad of paper. That's 3:16 p.m. Somebody wanted to know at what time will the Dow go ahead and hit the 20,000 level, and I'm saying 3:16. Now, could be 3:08. Could be 3:08. 3:08 to 3:16 is when the Dow is going to go ahead and make that burst up to the 19,980. It's going to be done during the show when the king, Tom O'Brien, right? You've got Elvis, that was one king. You got the U.S. dollar, that was king number two. But the king that can't be topped is Obi-Wan Kenobi, right? So during his show is when we're going to see the Dow go ahead and make it to that 20,000 level out there. 308, just as he's coming on, or right around 316. So let's see if my crazy 8-ball is anywhere close to that time frame. With regard to Goldilocks out here, what's going on between gold? I've got the emails here asking about gold and the miners as well. And, of course, that means we have to take a look at what's going on inside of the Japanese yen out here. Now, good news on the Western front, right? Because if we look to the west, we'll see yen futures out here. If we actually look just straight on my screen, we'll actually see them on the top panel of this chart. Now, on the top panel of the chart, what we saw yesterday was a fairly nice session inside of yen futures. They overtook that red line. That's that oscillator unchanged line. Didn't necessarily like to see this morning a pullback, but it was a pullback testing that oscillator unchanged line out here. And as long as it's above it, we know that it's above it as we speak right now. That's a good sign with regard to what's going on in the case of the yen. Now, the bottom chart here happens to show not gold, but it happens to show the 30-year Treasury, which has been above that oscillator unchanged. I mean, the price oscillator itself is rising, which is at least says counter trend rally is underway out here. And so all looks pretty well. That is why we are seeing gold give back some of its losses. That's why we're also seeing some of the miners behave pretty well. Barrick Gold, as an example, it's flat on the day, but let's go take a look at it. Let's go see what we can measure here. Let's go ahead and turn a couple of things on and off. Let's turn off that price oscillator. Let me do that. Let me do that. Let's also go ahead and turn on the volume out here. Get a feel for volume today. And it doesn't look like, so, Barrick Gold ABX could be if the yen really strengthens overnight and then gold really takes off, then Barrick Gold will probably gap up and create a nice little island bottom out here. So we want to be on island watch, Mon. And if we take a look at the last low that was out here about a few days ago, 37 million shares to the downside. Today, very light volume. Did I say very light volume? I did mean very light volume. Only 8.2 million shares out here. Nothing bullish, but nothing bearish about what we're taking a look at inside of Barrick Gold, one of the top holdings inside of, the GDX out here. So as we take a look at the GDX, this has made a lower low today. But if we take a look at what it's doing, it's going against that low from just a few days ago. You kind of hate to have to use a swing point from just a few days ago. I mean, now you're really starting to cut hairs and get into real short-term trading. But right now, I've got to at least give you that information, which had 175 million shares to the downside. And today, testing that low of 1868, you're at 1895 with, yeah, you guessed it right, 26 million shares. But aren't we in a light volume holiday trading time period? Goodness gracious, we are. But it is what it is out here. And I'll tell you what it is. It is Brent from Martinez, California. He's on the line, so let's go out to him. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
I'm doing very well, Steve. How are you? Thanks for taking the call.
Hey, my pleasure as always. So you want to take a look at Hi-Ho Silver. Did you ever watch you're too young to have watched the Lone Ranger.
Oh, Lone Ranger, I know what you're talking about for sure. Tonto.
Okay.
Yeah. I'm not that young.
Oh, okay. Sundays on the radio. I remember listening to that with my dad out there. So that goes back a couple of years. Are you calling about what looks like a potential hammer candle in silver today?
Yeah, I mean, a pretty big price swing in the thing. It got down to, I guess it was, what does it say, 567, and now we're at 1609. That's a decent swing.
It is a very good swing out here. Is there any pattern that you have been able to identify where you're seeing a potential bottom?
Oh, like you said, there's a hammer. I just was curious that I had been watching this morning and it was kind of weak, and all of a sudden I looked and it was positive. So that was kind of surprising. I really started looking around at it. I haven't looked at the full-on patterns at this point, but I see you got your chart up there, and yeah, it almost looks like it could be like a 3 drive to the bottom or something. But there's definitely, and I haven't done any kind of ratios or anything. What are you seeing?
Well, for the 3 drive, you really hate to go ahead and force those. So I would say the 3, not that it can't act as it, but I found that trying to force that pattern, usually doesn't work out. And because I would have drive 1 right around October 7th, drive 2 right around November 23rd, and that would take drive 3 out to January 11th, give or take a few days, versus, December 20th. So, and it's not that it can't, and ratio-wise, I also haven't done those calculations, but, here's what we know with regard to metals, whether it's silver or whether it's gold. It certainly is the influence of the Japanese yen, and I wish I really knew why. I just know that it is. And with regard to silver, when it started to make that bottom at about 4 o'clock this morning, between 4 and 4:30, and I've got a short-term chart out here for the Japanese yen, that is when it bottomed. And it was a double bottom test on a 30-minute chart here. It's moved a bit higher. So, that really spurred gold and silver both being able to bounce. There's no question silver has a potential of a hammer candle today. That would be positive. What's not positive, it hasn't traded above its oscillator and change line. That would be about $16.32 that we would be looking for. But, Brent, if I use the swing point out here, which would be valid from September 22nd. I do some wave counting to the downside. It happens to be in wave number 7. I wish price was being stretched, moving lower with less relative weakness. I don't have that on this chart here at the moment. But is it silver that you would trade, or would you be looking more at maybe a silver equity or two?
I've been kicking it around. I actually would consider just the SLV if it is at bottom, because we are, down at a certain level where it might make sense. I have looked at some of the silver stocks, but I think I would actually just go with the SLV, honest with you.
Okay, so if we're taking a look at the SLV, almost looks more close. In the case of the SLV, boy, light volume certainly today. It is holiday trading season, so we have to sort of take that into consideration. But for the way that, that's one way you could consider it. But with regard to the push lower in gold and silver, and for it to not have the emphasis behind it, only 8.6 million shares right now, going against last time down there, 12 million shares. So it's not the lightest on volume, but it's fairly light on volume out there. I see it with potential. That's what I see. But, boy, that Japanese yen, we need that on our side. We need that wind at our back.
Yeah, this is maybe just the first little hint of something.
Hey, stay on the line. I didn't realize we're so close.
Have a great day, Steve. Have a Merry Christmas, too.
You bet. You too. That's Brent in Martinez, California. Be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And I know that Brent's not on the line, but Brent, while I go to Mark in Concord, go take a look at Silver Wheaton, SLW, and take a look at the patterns out there. Then we'll come back to it. But first, let's go to Mark in Concord. Mark, thanks for calling. Thanks for holding. Happy holidays to you. How are you today?
Hi, Steve. Ho, ho, ho. How are you?
Doing very well. Nice to hear your voice. Are you all set for the holidays?
Talk to? Yes, I am. Got my holiday plans all done. Going to Cancun for New Year's.
Oh, wow. Now, is that a normal trip for you to go to Cancun?
My wife, yes. Well, it has become that way. My wife and I, we are going to move in 2 years to Mexico, so we are going down house hunting.
Wow, that's great. So what are the top 4 or 5 things that you love about Cancun? Well, one, I know you said your wife loves it, so that's the top of the list.
It's the fact that my wife is originally from Venezuela. I brought my wife into the U.S. My wife has a niece who migrated from Venezuela to Mexico. So we are going to go and move next door to our niece, or her niece.
Oh, that's great.
Yeah,
that's
and
great.
then we have we're going to watch our grandniece grow up. So that's the plan. That's subject to change. Boy, we're prohibited. Taxes, title, license, not included.
All right. Well, look, we all wish you here happy house hunting. This New Year's Eve, and then maybe just have a shot at tequila for me or something along those lines. Yeah.
I will. I can have a shot at tequila if I'll have one for myself first. Steve, I wanted to ask you. You covered this at the top of the show, but I'd like to get a little bit more in depth. You think the market will continue to grind higher, as you would sometimes say? How high do you think it's going to go? And do you ever foresee? I mean, we've been in this run for quite a while, and I remember a month ago you were substituting on Tom's afternoon show, and you said that it's going to be higher months now. It's going to be, and then you said it's going to be higher 2 months from now, and then you said it's going to be higher 2 months after that. And I've been thinking about what you said on Tom's show a month ago, and obviously you've been right so far. So my question is, how high do you think this market, both the S&P, NASDAQ, and the Dow will go? And do you ever foresee this thing really going up? I mean, nothing can go up forever. You know, but it's a bit mind-boggling, and I'm a little bit wondering how high do you think we're going to go? And I know you said in the beginning of the show, yes, you will have little corrections, but you implied in the beginning of the show that there will be very little corrections, and I started to think about what you said, and I said, geez, I wonder how high he really thinks it's going to go. Does he see down 30,000? I don't know. So maybe you can elaborate a little bit.
So, okay, great questions. I'm going to try to answer those as best I can. First, with regard to where I believe the S&P 500 is headed to, then what I'm giving you is I'm giving you longer-term objectives. So this is not going to be based on, the day-to-day activity. And that is that the S&P 500, the Dow, as an example, were in long-term consolidation patterns. They broke through those. They've tested it, and they've rejected that area. And so they suggest those patterns, and this is using a daily chart here in the S&P 500, that 2420 is the target. So in the S&P 500, my call right now is 24 to 2500. The S&P has a 2450 objective. That's looking at a 17-year consolidation pattern that it overtook. So that, along with this chart on my screen, along with the Elliott wave forecast of 2,500, they're all really synced up here to not provide me with any other information other than the fact that that is the long-term objective for the S&P 500. The Dow, 21,750. The NASDAQ Composite, 5,804. The Russell 2000, 1473. We might have to adjust that Russell 2000 because that might be the first thing on the way up. So that's the first thing when I take a look at it. When I look at markets that might be topping, okay, because it's important, it's incumbent upon me to look at both sides of the trade always. If we were forming some type of top here, we would see typical types of convergences that just aren't out there, right? Or divergences, really what I should say. For example, if we take a look at the QQEW, that is the equal weight for the Qs out here versus the actual Qs out here, I don't have a diverging pattern. What I see inside the equal weighted ETF mark is I see slightly higher highs that are forming. I see that same thing inside of the Qs out here. Even though some might say they've been a little bit weak here in the move, they actually were the first ones to get above some resistance zone and then just waited for the rest of the markets to kind of catch up. But there's no divergence in this pattern. If I look at the S&P 500, you and I can do the same type of thing, and let's look at the equal weighted ETF, the Guggenheim equal weighted, called RSP, and look for a divergence here. Right now, it's making slightly lower highs, but so too is the S&P 500. In this case here, I'm just looking at the SPY. So no divergence here. Typically, when we see a divergence, it's where the equal weighted is diverging, meaning making lower highs, while the equal weighted or the weighted SPY would be making higher highs. No such pattern exists. For the Dow, one of the good things to look at is General Electric. Even though it's number 29 of 30 inside the Dow, it still is the general. It's still, when we see a divergence, meaning lower highs versus the Dow making higher highs, that's a signal to us that there's a problem in the Dow. Guess what? No problem at all. We're making higher highs. Has GE taken out the highs from 2016? No, but right now I'm just looking at the shorter term pattern. It's making higher highs. So there's no divergence here. Again, normal divergence that we would see. If we take a look at the S&P 500 again, come back to it, and take a look and compare that to New York Stock Exchange all-time, well, not all-time, but 52-week highs out here, we don't have a sign of lower tops. Typically, if you're going to see some type of divergence with the S&P hitting all-time highs and not seeing the new 52-week highs inside the New York Stock Exchange, that pattern would be here, just as it was back in the 2016 timeframe. In fact, we hit basically a really extraordinarily high level. This high level that we hit back here on right around December the 8th, 9th, inside the New York Stock Exchange, we haven't been up at that high of a level since May of 2013. And the markets have just simply cruised higher since then. What that tells us is there is strong market breadth out there, period. So again, no normal divergent patterns that you and I would see out here. So then without seeing those in place, I don't have any choice. I guess I have a choice, Mark, but I will never be disingenuous. In other words, I can have all the enthusiasm, excitement, and call it 2,500, 2,400, and so forth. But I'm telling you, Mark, if I saw data that changed an hour from now, that would change my opinion, I would change it here with you. And until that evidence appears, we have to go with the information that is at hand. Again, really taking a look at longer-term charts out here. Now, we're in a seasonal cycle. This seasonal cycle is the predominant cycle that has been in place all year long. Forget about presidential cycles and all that stuff out there. This has been the cycle pattern. And this says that, quite frankly, the Dow would have made a low yesterday or Friday. And we should head higher into about January 6th out there. I really think that's what's in play out here. But we're going into a break. You can ask me some questions. We'll get back to that if you'd like.
Okay, great. Yeah, I will hold through the break.
Okay, perfect. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's up 95, 19,979 is where we're trading right now. We're going back out to Mark in Concord. So, Mark, I laid out for you, just some of the normal patterns that we would see, normal divergences that we would see when the markets typically make a top. And they don't exist right now. Even one more I'll just throw out there for you, and then I'll go to your questions. So I take a look at the New York Stock Exchange. Back on November 9th, or December 9th, I should say, is when it had made its highest all-time high. And we are above that today. So, again, plenty of market breadth out here to suggest, higher highs. Now, I've given you more of the longer-term perspective out there versus, what's going to happen minute to minute. So fire away.
I know that you know from when you used to do the morning show with Tom that I've listened to you guys for quite a while. So here's a couple of questions. First of all, I know that Larry Pesavento had been talking about earlier in the year, kept talking about the New York Stock Exchange Composite Index, not the big broad index had been weaker than the rest of the market, and that he thought that was a negative sign on the market. And maybe you could comment on that. But I also want to ask you, is Tom O'Brien has been talking about going testing a Brexit low. He hasn't talked about that for the last couple of days, although this morning show he did say once we get to the 20,000, he was going to go short again. So I guess my two questions are, number one, do you foresee us going down to Brexit? And number two, in light of what Larry was saying, not recently, but in the past, what do you think of the NYA index?
So I'm aware of the divergence that he would have been referring to, a while ago, but that divergence has vanished. So again, you and I took a look at maybe a half a dozen or so different tools that when they do show divergences, we should pay attention to it. But in the New York Stock Exchange, there is no divergence any longer. When the advanced decline line, which I believe was one of the tools that Larry was looking at, is at all-time highs, there's no divergence out there. It's just not there. So it was at one time, but would no longer be the reason to say the markets are going to falter. And then when price got above the island top mark inside the NYSE, that formed back in the early part of September, and we got above it with conviction, around December 6th, 7th out there. There's nothing more bullish than a failed bearish pattern, and that certainly was one of them. With regard to going down and testing the Brexit lows out here, I don't, that's not a call that I'm making. Now, the Brexit low is you're going back into June of 2016 out here. I don't see that at all. Now, the reason I don't see that is because if you go back and study the charts, for example, of the QQQ series ETF, what you're going to find consistently, not like on occasion, but consistently, you will see that what the Qs do at lows is do it with high volume. These are lows that typically don't get tested again. Somewhere out in the future, sure. But with regard to where we're at right now, that was a high volume low, and no different than other high volume lows that we've seen inside of the Qs out here. And so I don't see that as something that's going to be tested. But, maybe it will, maybe it won't. That's not my call at the moment. And I think that when Tom and I are talking, or any of the contributors are talking, sometimes we're speaking about different time frames. So, Tom is the master of volume out here, and certainly like the 10-minute charts, and you and I haven't talked about a 10-minute chart out here at all. So
Steve, thank you so much. I hear the music you're going to run. I'm going to send you an email. Thank you, Steve.
Sounds great. And best of luck to you. Happy holidays. Happy house hunting. Folks, stay tuned. We got a great show for you next, and we'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.